Gold and silver prices were down sharply on Friday morning, $3,177 an ounce as the week ends for gold. Traders are ending the week in a slightly better mood as signs of easing U.S.-China trade tensions lift sentiment, but warnings from Walmart CEO and Fed Chair Jerome Powell are weighing on markets, both flagging rising costs and persistent supply shocks, suggesting rate cuts may not come soon. Well, to unpack what this all means for the metals in the markets, we're joined now by Chris Vermeulen, Chief Investment Officer at the Technical Traders. Chris, thanks very much indeed for your time.
Yeah, thanks for having me. Always a pleasure.
Well, gold sliding as the week ends, but what's interesting is that you're still short-term bullish. What's driving that view, even with prices under pressure right now?
I mean, when we look at the price of gold, we're in a scenario where the whole world is very uncertain. And when the world gets uncertain about all kinds of stuff, typically they want to move away from the financial system and they want to move into physical gold. We've seen this happen over and over again. Uncertainty just makes people want to buy gold. And we're in a cycle right now where gold tends to do very well. I believe we're in the late stages of a bull market. We've got all kinds of chaos going on. Costs are going up. And investors are just fearful. So they're moving into gold. And the chart of gold, if we were to take a look at that, the chart of gold is actually fairly bullish when we take a look at what is going on with gold in terms of the daily chart here. So there's chart patterns involved. More or less what we've seen is a very strong run up. It's been flagging sideways here, which is a bull flag pattern. And there is potential based on this bull flag pattern that gold could push to about 3,750 in the near term. Overall, I'm more kind of bearish on the economy, on the stock market, and gold if you were to look forward, several months from now. But I do think gold still is in that sweet spot where when uncertainty hits and more fear kind of kicks in, gold could have one more push up to around about 3,700, which is a fairly significant move from where it is right now.
All right, let's talk about the months ahead. I mean, you flagged a bearish outlook for gold and mining stocks 4 to 8 months in that range. What's behind that shift, and when do you expect the next real buying opportunity to emerge?
Yeah, I think there's going to be an amazing buying opportunity for gold, silver, and especially mining stocks that we haven't seen in a very long time. I think it'll be very similar to the late 2008, 2009 market bottom where gold and silver and miners took off hundreds or thousands of %, depending on the individual mining stock. I think we're going to walk into here is the economy coming into a recession. We're going to see pretty much things tighten up. Real estate's going to go down. Stocks are going to start to fall. Investors are going to be very fearful because their real estate values are going down. Their stock portfolios are going down. They start to dump everything. It creates forced liquidation, and typically gold gets sucked down with it. Even if it's the best asset to be in, the selling pressure pulls gold down. And I believe that could drag out 6-8 months from now. And gold could become a screaming buy along with miners at that point. But they'll be under pressure, I think, during that kind of sell-off in the overall market.
It's interesting you mentioned the miners here. You've been watching mining equities closely. Despite today's step, they've been trending up just over the timeline. Is this a false rally, you think, or are miners still offering some upside near term?
I think miners are very similar to gold. I think they have potential for another push higher. That being said, the long-term chart of where we are for the economy, the stock market, gold itself are pointing to, we're very close to a top. While miners could push a little bit higher, I don't think I think it's a higher risk play. I think there's more potential to kind of wait, let things reset. But there's no doubt we could see gold and silver and miners actually have one more big push to the upside. As gold runs to 3,750, miners will probably jump on that train and outperform percentage-wise.
Very quickly, Chris, the broader picture. You've been expecting a recession, or are you expecting that recession? You mentioned it earlier, or a bear market to drag down metals lower later this year. What key signals then are you watching to time that turn?
Yeah, I mean, there's a lot of things that come into play when I analyze the market. So I usually like to look at the long-term weekly and monthly charts of various asset classes. The financial systems are linked in so many ways. If one asset class is going down, that money's going out of that asset and it's got to go somewhere else. So I track money flows between currencies, commodities, sectors, different things like that. And depending where money's moving, is it moving into defensive plays like consumer staples, utilities, precious metals? Or is it moving into ARC ETFs, like highly leveraged small cap companies with lots of potential, risky stocks? And so we have been seeing more or less the broad markets have been going down in terms of, if you looked at the basket of all stocks, they're really not near the highs. It's just the stock indices like the S&P 500 and NASDAQ are tech heavy weighted, looking like the market's strong, but the market is falling apart kind of underneath the hood, and it's not as strong as people think. So the momentum has kind of been lost overall. And that, and the economic data is also showing signs that things are starting to slow. And all of that kind of points to usually a recession and a much larger correction in the equities market.
I want you very quickly, as we wrapped up, to associate two factors here on commodities. One, U.S.-China trade tensions as the months unfold. And what do you think the Fed is actually thinking about as the months unfold as well?
Ooh, that's a good question. I mean, I don't go too deep into that. I mean, it's trying to get into the Fed's mind, what they're going to do. I think rates are probably going to stay the same. Maybe they even go up a little bit. There's a lot going on with the tariffs and inflation. I think the Fed is probably scared to do anything. I think they're just going to hold things tight for a while and try to get a gauge on stuff. And that's, I think, the best insight I have on that right now.
All right, we're going to have to leave it there. Chris Vermeulen, Chief Investment Officer at the Technical Traders. Thanks very much indeed for your time.
Always a pleasure. Take care.